Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to be solving December 2022 university question paper under the subject direct tax. This is the part 3 of our video series based on solving December 2022 paper. Okay, direct tax paper. Again, a very important video for all the TYBMS M5 student. We have already solved quite a number of sums from this paper in our part 1 and part 2 video. Now, whatever remaining sums are there, we are going to take up in this particular video. Chalo, so let us see which are the remaining question in this question paper. The very first thing was given that Mr. Amit owns a house at Delhi which is let out. So that's an LOP. The fair rent of the house is 24,000. Municipal valuation, standard rent, all the things have been given to us. So now always remember, whenever house property ka sum is given, first always note down the formula. This is the fixed formula. Not even one extra thing needs to be added to this, or not even one thing which has to remove it out. So alphabetical Y, A, B, C, D, E, F, G. G stands for gross annual. So A, fair rent, municipal, higher of A and B, standard, lower of C and D, actual, gross, that is higher of E and F. Less municipal tax gives you NAV, that is net annual value. Less deduction under section 24, that is one standard deduction, that is 30% of NAV. Second is interest, and you can get your income from house property based on that format. So we start with the fair rent. Now it's given fair rent of the house is 24,000, so we noted down 24,000. Municipal valuation is 20,000, so we noted down 20,000. Higher of A and B, so 24 and 20 mein higher is 24,000, so we taken that. After that is given standard rent is 30,000, so we noted 30,000. Now lower of C and D, so from these two the lower value is 24, we take that. Actual rent received is 2,500 per month for all 12 months. So 2,500 into 12 comes to 30,000, that's our actual rent received. So the GAV gross annual value is is higher of ENF, which comes to 24 and 30 may say the higher value is 30,000. So that is GAV 30,000. He also received 10,000. So now we read ahead after that. So GAV we got as 30,000. Okay. Now he received 10,000 from tenant for charges toward lift, live generator, etc. He makes the following expenditure for his house property. So anything given by tenant is not there a part of the format, so will not appear anywhere in the sum. So we ignore that. Municipal tax paid by Mr. Amit. Amit is the owner. Owner pays municipal tax. He'll get it at deduction. The less 4,000. So 30 minus 4,000 is 26,000. That's our NAV, net annual value. Next they gave fire insurance is 2,400. Repairs 2,000. Ground rent 2,000. None of them is there in the format. We ignore it. Fund borrowed was 40,000 at the rate of 10% were used for construction, and interest on the borrowed capital during the previous year came to 4,000. So 10% of 40,000 is already 4,000. They've already removed and given you that. So that is the interest that will come later on. Okay. So now once you go to NAV, from that we less deduction under section 24. First year standard deduction, that is 30% of NAV. So 30% of 26,000 comes to 7,800. Less second may we have less interest. Interest was already given to us. They calculated 4,000 as given us. That's it. 26,000 minus 7,800 minus 4,000. That will give us our income from it is house property. We're not profit. Okay. So I'll just write it a prop. Income from house property came to 14,200 rupees. Again, this is how you'll have to solve this sum. Very simple. You just have to remember the format and just have to place the values according to the format. Nothing comes beyond the format. Only the things which are given in the format, only those things will appear. Rest, anything which is given in the question is just extra. Ignore them. Okay. They told us to compute income from house property. This is done. Our income of house property has been done. So I hope everyone have understood this. Last question which was there in the particular paper was based on salary. Okay. Now before starting the salary, one small advice for all of you all is that when you are going to appear for the paper, on my personal experience, I would say that you all shouldn't appear the sum based on size. Though, see, chalo, if you all are good enough, you know all the rules and all, then it is good. But anything in option to salary will always be a better choice. Okay, from my personal experience that I keep correcting your papers. So based on the paper correction, my small experience is that rather than going for salary, anything in option to salary will always be a better option. Okay, again, that's your decision. All can solve according to that. Chalo, now let us solve the salary based sum. Mr. Anand is an employee of XIZ Limited in Mumbai and covered under the Payment of Gratuity Act, retires at the age of 64 on 31st December after completing 33 years 7 months service. At the time of retirement, his employer gave him 20 lakh 51,640 gratuity. He is not a government employee, this is a private company. He is also entitled to a monthly pension of 8,000. He gets 75% of pension commuted for rupees 4 lakh 50,000 on 1st Feb. Very important data. Calculate the taxable salary for the assessment year. Again, basic salary per month, bonus, taxable, HRA, employee contribution 1 lakh 10, exempt value is given, professional tax is 2,000. Let us see how to go. First of all, he is retiring the month of December. So Jan, Feb, March, 3 months of pending. So he's only worked for 9 months and he's retired. Okay. So we start with basic salary or gross salary. So under basic salary, it is 80,000 a month. So 80,000 into 9 comes to 7 lakh 20,000. Bonus 36,000 directly given. HRA 1 lakh 17 directly given. Employer contribution is 1 lakh 10,000 minus 86,400, which comes to 23,600. That's the basic data which is given. Now we jump to gratuity. Gratuity ka three rules are there. Everyone should remember that. One, if you're a government employee, fully exempt. If you are covered under the act, you have a particular rule. If you're not covered, you have a particular rule. Since here he is covered under the Payment of Gratuity Act, so let us see how to solve that. First, gratuity received is 20 lakh 15,000. So 20 lakh 51,640. We note down first gratuity. Let's exempt. We don't know this value right now. Okay. Let us see how to get that. That is the least of the following rule. Number one, 15 divided by 26, that's the half month salary, into 80,000, that's the basic salary, into the year that he was there in service. Okay, round up. 33 years, 7 months is nothing but 34 years. So into 34, we get the value as 15 lakh 69,231. Second is the notified amount, which is 20 lakh, the limit. And third is the actual receipt, that is 20 lakh 51,640. From these three, whichever is the least value, that much of deduction he will get. So 15 lakh is the least, so we take that least, we subtract, we get 4 lakh 82,409 as taxable value. Okay, next comes his uncommuted pension. So he's getting monthly pension of 8,000. Okay, he retired in the month of December. Remember, he retired in the month of December. So from Jan, Feb, and March, he will get his monthly pension of 8,000. So in the month of Jan, he got his 8,000. But from 1st Feb, look at this very carefully. From 1st Feb, 75% of the pension commuted was removed. Whether he gets commuted pension, he removed 4,50,000 from the accumulated value. So basically, for Feb and March, 75% is already removed. So the government won't pay him the remaining, the 75. He'll only pay him the remaining 25%. So 8,000 ka 25% is 2,000. So 2,000 of Feb and 2,000 of March ka monthly commission pension he will get. So uncommuted pension में 8,000 into 1, that is Jan ka full commission, full pension. Feb and March ka he'll only get 25% of the pension because 75% he is already removed in on 1st Feb. So 2000 into 2 is 4, 4 plus 8 is 12,000, that's uncommuted. Now we jump to commuted. The rule of commuted is if anyone is taking a commuted pension, the rule is if there is gratuity, 1/3 is exempted. If there is no gratuity, 1/2 is exempted. So your gratuity is there, so you'll get 1/3 of the exempt. Okay, so now let us see. See, commuted pension given was 4,50,000. Okay, was 4,50,000. Now this 4,50,000 is basically the total value you're talking about. Okay, so on the calculator, okay, it's basically like 75% is 4,50,000. So 100 is how much? So if you cross multiply, you should get the value as, so let's say 4,50,000, 4.5 lakhs is 75%. So 100 is how much? So 100 into 4,50,000 divided by 75, we get the value as 6 lakhs. So this is the value of 6 lakh which I'll take in the question. So amount of exempt value will be 6 lakhs, okay, into 75%. 75% of 6 lakhs is 4,50,000. So 6 lakhs ka 1/3 will get exempted. So I'll just cancel this part. This is not there. 6 lakhs is the total commuted value. Okay. So my total commuted pension is 6 lakhs. 6 lakhs ka 1/3 is 2 lakhs. So the 2 lakhs will become exempt. So from 4,50,000, if 2 lakhs is exempted, my taxable value will only be 2,50,000. So that will be the taxable value. Okay. Now, out of this, when you add up all from your gross to your gratuity to your commuted and commuted, we get the gross total salary as 16 lakh 41,009 rupee. From that, less deduction under section 16. Number one, standard deduction 50,000 flat. Second, professional tax, which was given in the question as 2,000. So when you finally subtract the final values, your final net taxable salary will be 15 lakh 89,009 rupees. Okay. So this sum was based on commuted and uncommuted pension under salary. Chalo, I hope everyone have understood these two remaining sums which were there in the question paper. Chalo, with that, we will be ending this video here. Thank you.